Hey Chris, I was wondering if you had a few minutes to tell me about the strategies of good trading.
Sure, Ryan.
Everyone is always trying to find the tricks up people's sleeves of how to play the markets. After all, if you weren't one of many who were losing money in the scare of 2008, most likely you did something wrong and you could benefit from finding new ways to make money.
I agree, so tell me where I should begin.
Well, to start in trading, finding trends is key. Because you want to be on board with stocks and companies that are on the rise and growing in popularity. Koval displays this in The Little Book of Trading. A key area to focus attention on and emphasizes Koval's idea of thinking like a poker player and play the odds. If you're playing a positive expectation game, you don't want to be knocked out. Good stuff always takes care of itself, but you have to stay alive. You can't play and be a part of the game if you're dead. I have been playing in the same poker chat room for almost every trading day for the past couple of years. The warning signs are everywhere and usually the same. Like in poker, traders put up large numbers in both winners and losers relative to their account. Then, a big fast-moving stock captures everyone's attention, similar to a pair of aces in the flop of a poker game. Many of the trading blow-ups actually speak afterward. Interesting approach. So if this is true, then what should be one of my main focuses in trading? The focus on how much can be made instead of how much they can lose is the main theme of every trading. Even if you know ahead of time what an investment will do, or what your odds are of catching a pair on the river card, it's not enough information to maximize the return on investment, and it's not always a guarantee. If you leverage up, you most likely will get killed as the market zigzags its way to the ultimate price. You make some valid points. How would one go about making gains or making up for significant losses from hits in the market? You must know in trading is the trend. Traders have to be contrarians in the sense that they have to cut their losses quickly and let their gains run. We're designed to think that what we lose is going to come back, whether it be the dog who disappears in the morning but is outside the kitchen door by evening, or a car keys. A trend trader who believes that his unrealized losses will eventually be transformed into real profits won't be trading for long. A trader who accepts the premise of mean reversion, for instance, a trader who believes he has found a mispricing in an extended market and expects a return to normal prices. Many hedge funds do this and will find that it never works in the long run. That kind of thinking blows up with regularity. Wow, this is a lot of information to take in, but at the same time I can see that it is very useful. It is a lot of information. It's not something that I'd be able to teach to my dog Daisy in 3 days. But with good time you'll find yourself grasping these skills. Chris, from my experience, the only factor you can control is how much you are willing to lose. You must research as much as you can for as long as you can and understand the fact that you may lose all your money. Winning is everything in the trading game, so developing the right strategy and studying hard in trading is the key to success. Ryan, you are absolutely right. In trading you must develop a system and stick to it if you want to be in the game for a while. This is where many traders fail. They move away from their original strategies looking for the big money when they should have stayed on the smart money. Every year millions of dollars are lost in accounts where traders make basic mistakes like these. Betting all your money on high-risk trading is a sure way to fail if you don't stick to your original tested strategy. The safe but above-average return strategy starts with compounding. Thoughts right, Chris. The compoundings make all the difference when it's over 30 or so years. Even 2 or 3 percentage points make a very large difference. Another key to trading that I learned from Cole Wilcox, a well-known trader. He explains that the market fluctuates at random with no pattern, and the key is to follow the trends at all times, and you should never make an investment without knowing your exit strategy first. You can only control how you react, not what happens. Yes, why focus your time and energy on something you have no control over? You will never know how long the short term will be. It can be 10 years or it can be 10 days. Betting on the short term will lead to failure in the market, but knowing your exit when it comes can make or break you. Yes, I am trying to understand all I can about trading so I do not take any losses. One thing you need to come to terms with is the fact that there will always be losers. Even the most experienced traders suffer losses. It is a part of the game, but again, knowing your exit will prevent you from losing it all, losing a little or making money. It's like in sports. When you lose you want to be better, and when so playing people better than you in turn makes you better. That I understand. One thing that I have heard that is mentioned in many books is sing the whipsaw song. What does that mean? Is it a trading term? Sing the whipsaw song means that the market price is headed on one direction but then quickly changes direction. This happens often with high-risk markets. So, now you have two choices in your trading. You can become a trend-following trader or you can invest with a trend-following trader. Those are your two choices for success in the market. Of course you can bet the high-end mutual funds and hope it will make you enough in the long run. Thank you, Chris. This has been a great help. I have read a lot about trading, but the advice you get from experienced people connects all the dots.